Hey you, what's up guys? Welcome back to my channel. I'm Arif Rahman. Today I will give you news about market selling make yes, but traders are on the sidelines until BTC confirms $20,000 as support. BTC and altcoins could continue to see selling. But positive is that traders took shelter in stablecoins instead of completely exiting the crypto market. The total crypto market capitalization fell off a cliff between June 10 and 13 as it broke below $1 trillion for the first time since January 2021. Bitcoin or BTC fell by 28% within a week, and Ether or ETH faced an agonizing 34.5% correction. Presently, the total crypto capitalization is at $819 million, a 24.5% negative performance since June 10. That certainly raises the question of how the two lending crypto assets managed to underperform the remaining coins. The answer lies in the $154 million worth of stablecoins distorting the broader market performance. Even though the chart shows support at the $878 billion level, it will take some time until traders take it every recent event that has impacted the market. For example, the US Federal Reserve raised interest rates by 75 basis points on June 15, the largest hike in 28 years. The central bank also initiated a balance sheet cut in June, aiming to reduce its $8.9 trillion positions, including mortgage-backed security or MBS. Venture firm Three Arrows Capital or 3AC has reportedly failed to meet margin calls from its lenders, raising high major insolvency red flags across the industry. The firm's heavy exposure to Grayscale Bitcoin Trust or GBTC and Lido's stake ETH or STETH was partly responsible for the mass liquidation events. A similar issue for forced crypto lending and staking firms Celsius to help users withdrawals on June 13. Investor spirit is effectively broken. The bearish sentiment was surely resulted in crypto markets as the fear and greed index, a data-driven sentiment gauge, hit 7/100 on June 16. The reading was the lowest since August 2019, and it was last seen outside the extreme fear zone on May 7. Below are the winners and losers since June 10. Curiously, Ether was the only top 10 crypto to figure on the list, which is unusual during strong corrections. Waves lost another 37% after the project launched decentralized finance or DeFi application first finance implement a daily $1,000 stablecoin withdrawal limit, and it dropped 34.5% as developers post postponed the switch to proof of stake consensus mechanism for another 2 months. The difficulty bomb will essentially cause mining processing, paving the way for the merge. EV traded down 33.7% after market DAO voted to cut off the lending platform EV's ability to generate the AI for its lending pool without collateral. The community-led decision aims to mitigate the protocol's exposure to a potential impact from staked Ether or SDETH collateral. Asian traders flew into stablecoins. The OKX Tether or USDT premium is good cook of China-based retail crypto trader demand. It measures the difference between China-based peer-to-peer or P2P trades and the United States dollar. Excessive buying demand tends to pressure the indicator above fair value at 100%. And during bearish markets, Tether's market offer is flooded and causes a 4% of higher discount. Contrary to expectation, Tether had been trading with a premium in ASEAN peer-to-peer market since June 12. Despite the massive sell-off in crypto prices, investors have been seeking protection in stablecoins instead of exiting to fiat currency. This movement lasted until June 17 as the USDT paired its price versus the official Forex exchange currency rate. One sold analysts crypto derivative metrics to exclude externalities specific to the stablecoin market. For instance, perpetual contracts have an embedded rate that is usually charged every 8 hours. Exchanges use this fee to avoid exchange risk imbalance. A positive funding rate indicates that longs or buyers demand more leverage. However, the opposite situation occurs when shorts or sellers require additional leverage, causing the funding rate to turn negative. Thus, derivative contracts show more significant demand for leverage short or bear positions across the board. Although Bitcoin and others numbers were insignificant, the TRX token and Polkadot situation raised concerns. Polkadot's negative 0.19% weekly rate equals 3.7 per month, meaning those waiting on the price decrease are willing to pay a reasonable fee to maintain their leverage positions. This is usually interpreted as a sign of confidence from buyers, hence slightly worrisome. The market dipped by 70% and there's still no demand from leverage long. The big question is how backward looking is the investors with a lack of appetite for buyers using leverage despite the 70% correction since the November 2021 peak. It is encouraging to know that Asian traders moved their positions to tether instead of exiting all markets to flat deposits. There likely won't be a clear sign of a bottom formation, but Bitcoin bulls need to hold ground at $20,000, avoid breaking a 13 years old pattern of never breaking below the previous 4-year cycle all-time high. Okay guys, thank you for watching my video. See you next time. Bye bye.